Sure.
Hello, thank you for having us. So the new reality seems to be higher for longer interest rates. How does this change your funding strategy? Of course, this environment is squeezing borrowers at a time that you need more liquidity. But at the same time, you have to be sensitive to the way you approach, your clients. You can't be a bull in a china shop. So I'd like to hear from you, your strategies. If you'd like to start, Elizabeth.
Sure. So our funding strategy is informed by the interest rate environment in which we're operating. But really, each year we have somewhere generally between $30 and $40 billion worth of funding to do. We put together a borrowing plan. Part of the interest rate influence that might be incorporated into that borrowing plan will be sort of a fixed floating mix. So we might adjust that. But really, our overall funding strategy, it's not to say we ignore interest rate in that environment, but we are issuing $30 to $40 billion a year. When you take out times when markets just aren't conducive, when there's blackout periods, when there's economic releases, when there's uncertainties that destabilize the market, there's really not a lot of open weeks in which to get an issue into the market. And so we are generally sort of doing $750 million to $1 billion in any good week, just in order to get all of our funding done in a timely manner. So with that, we're really conscious of keeping a very, sort of a very consistent approach to the markets. We don't mean to confuse investors. We like them to understand how we operate and what they can expect from us. And so while we'll adjust things at the margin because of the interest rate environment we're in, we're really focused on making sure investors understand what we're doing in the market, why we're doing it, how we're doing it, when we might be doing it. And we're very driven by investor interest. And with that, we feel that that allows us to access the market without having too many parameters around us that limit what we can do if there's an opportunity. So we're very opportunity driven. Investors show us their interest. We try to respond the best we can to that. And that is really kind of our overall strategy, is to really focus on investors. Everything else kind of comes behind that. And to be consistent and to be thoughtful in how we approach the market, not bring too much to market when it's not appropriate, to feed the market when it is appropriate, and to not deviate too greatly from how you think of us and how you know us, and to build large liquid issues that are readily tradable so that you can get both into our debt and out of our debt somewhat seamlessly. I hope that answers your question.
Of course it did. Would you like to add anything, Steve?
No, sure I would. And all of the provinces in Canada really rely on Ontario to set a benchmark that we can price off of. We have the luxury of being much more opportunistic than Ontario. We don't have to come every week. We can time the market a little more effectively, simply because we don't have the pressure.
It's a good time for you to say if she's being a good benchmark or not, right?
They do a fantastic job. The liquidity in Canadian provincial bonds is unparalleled in the bond universe, I think. You can see 30-year provincial debt trading in a very tight spreads across all of the provinces. Some of the smaller ones, your Newfoundlands, your Nova Scotias, maybe not as much. But the debt trades incredibly well, and that's all based on the foundation that Ontario builds for us. That's the nicest thing I'll say about Ontario for the rest of the week. But much like Elizabeth, I mean, as much as rates are higher than they have been in the past decade, really, they're not historically high. The interest rate crunch that the federal government, for example, is feeling right now is not something that we bear in Alberta. We've been issuing long bonds for decades. We've been prudently building a curve, 5s, 10s long, so that all of the bonds trade easily, and we're really not feeling the pinch yet. it costs us a bit more to raise on the margin, but it's not something that's going to hit our fiscal balance at all.
Anything to add, Jim?
Well, I just echo a lot of what Elizabeth and Steve have said and add, I mean, the basic mantra for any good borrowing program is price, size, and time for success with the investor base. And that doesn't change just because we're in a different interest rate environment. And as Elizabeth said, you don't want to confuse the financial community by all of a sudden appearing different. It doesn't, there's no need to do that. And interest rates, as Steve said, really they're not all that high if you look at it on a historical basis. I think what is different, though, perhaps, is that in this environment, borrowing programs are bigger. There's a bit more competition. Mm-hmm. And in an environment where there's volatility, it's closing, it's presenting fewer and narrower windows through which to issue. So that does become an issue sometimes, is trying to get in a nice way, get your elbow in so that you appear. And in Canada, we have a very good borrowing protocol among provinces where you don't hear of collisions. And so that's not just a coincidence. It's done by good protocol and prior discussions that we've had on this very matter. But that competition is an issue, and you have to be nimble. You have to be prepared to jump through those windows when they present themselves. We're very much dependent on data releases now. So you have all these sort of mini blackout periods when there's some data event and all of a sudden we all have to freeze, wait for that to pass, or a central bank's going to make an announcement and we all notionally freeze again. So I think maybe the difference is that it may be issuing less frequently in larger size. So the province of BC this year would be an example of that. We've done $2 globals, each $2.25 billion, and that fitted right, and it allowed us to sort of make good inroads on the $10 billion we borrowed year to date by being able to go bigger. And these issues, like a $3 billion equivalent Canadian for BC would be 6 bond issues. So there's a lot of, you avoid those sort of traffic issues. So there are a number of other things, but that would be the main thing, I think, that you just have to, but don't appear differently and confuse investors by all of a sudden being somebody different than you really are.
Than you've been, yes. And it seems like a lot of challenge, all this volatility, like the windows closing quickly. How do you deal with diversification, for example? Are you seeing more openings in the offshore market and the indoor market? What are your successes? You mentioned a bit about your successes outside of Canada, but how does that compare versus what you're doing in Canada, if you'd like to start?
Well, I mean, this year the province has done, of the $10 billion we borrowed, 65% has been done in either euro format or these dollar deals I just mentioned. So it has been busy for BC. We are drawn into those markets, though, by competitive economics. So we're not really, we don't set targets that, this year we will do this much offshore. But this year, economics were kind to the province. And I'll give my capital markets team great credit by being nimble, and sort of taking the initiative to get themselves in so that they could seize on those good economics, because they disappear as quickly as they're there. They can also disappear. So that's a big part of that strategy.
Is your team as nimble as his?
Oh, we're much more nimble, actually. we're better looking and we're quicker. No, look, in volatility, that's where the opportunity comes from, right? And without some interest rate volatility, you don't find arbitrage opportunities. And that typically is what drives us offshore. One of the interesting things I found is because the rates are higher, but the curve is also shifting shape. And that's actually we've seen a lot of inbounds. We haven't done any transactions yet, but in terms of doing some structured product in the Canadian sector, we've had opportunities come there. And so we kind of leverage the volatility to our advantage. And as Jim says, if there's an opportunity to save money going offshore, we will take that. We maintain multiple global platforms just to enable us to do that. So Aussie, euro, dollars, whatever. But I mean, if we're being honest on arbitrage, we can always, every issuer will claim savings on offshore issuance, and you can do that because you're comparing something you did to something you didn't do. So it's a bit theoretical, and it's kind of a vanity play. I think the important thing for the offshore issuance, from our perspective, is access to markets at all time. I mean, the critical nature of provincial funding means that we need access to cash at all times. If we don't pay doctors, they don't come to work, and that kind of matters, right? There's no situation where we cannot access cash, and that's why we go offshore. If we can save money and brag about it and do bigger issues, yeah, sure, we'll do that. But it's really about getting cash in the door.
Yes. I would just echo Steve's comments in that you want to keep as access to a variety of markets because there's no telling which markets will work and not work in any given time frame. So you try and keep your options open. As Jim mentioned, you want to be agile, nimble, whatever adjective we're going to use to describe that. So when opportunities arise, you can seize them. For Ontario, we're also taking into consideration to some extent, we're trying to diversify our investor base when we're going to foreign markets. Sometimes we're looking at terms that we wouldn't normally do in the domestic market. So in the dollar market, we can sometimes go a little bit shorter, which is something we don't really take part in the Canadian dollar market. But the opening and closing of windows is very tricky. Markets have been extremely volatile. We're very used to, in the domestic market, we can start and finish an issue in 12 minutes. So it's a quick thing. And I think that always surprises people how quickly that whole process unfolds from when we pick up the phone and call a lead on a deal for us and we've papered it and sent it off to documentation. So that kind of speed is a little bit exhilarating and in some ways kind of influences our thought process. So when we look at going into an international market to do some funding and we're talking about a 24-hour window, given sort of the backdrop of volatility, be it geopolitical, be it market-driven, it's not that we're uncomfortable, but it means that we pause and think about the fact that we're going to be out there for 24 hours. And a lot can change in 24 hours in this particular time, like in the times we're living in at the moment. So we are trying to do some foreign issuance this year. We only did one foreign issue last year, and there were a number of circumstances that conspired to make that so. I think if any of you were able to look at our website and see the video that our CEO released once our fall economic statement was out, he very clearly pointed to international markets as somewhere we'd be looking to go for funding. That being said, since that fall economic statement came out, we funded, as of this morning, $7 billion in the Canadian domestic market. So when we need to go and get money, we can go, we can be very quick, we can get size, and it's very cost effective for us in Canadian dollars. So that's very attractive. And so when we're looking at foreign markets, like they also have to have some appeal for us. We have to, getting arbitrage is really not on the table most times in some of the bigger current, like in euros or in US dollars. But we try and look for a reasonableness test when we're going to those markets. Does this make sense for us? But you kind of have to weigh that up. We have these Canadian investors who have been solidly behind the Ontario credit through COVID, through the last year, through this week, through last week. And when you go to a foreign market and you're willing to pay up quite a few basis points to a number of investors that aren't your bread and butter investor group, you want to think about how often you're doing that and what the impact or what the opinions of those investors in the Canadian domestic market are when they see you willing to do that for an investor who's not walking side by side with you day in, day out, week in, week out. So we're weighing that up as well. We're trying to make sure everybody's looked after, including ourselves, that we're getting our funding program done. But there's a lot of moving parts when you consider going into the foreign market. and the volatility underlying it is certainly part of it. It's both a good thing and a bad thing. And then there's all these other considerations, plus about 1,000 more that the three of us could probably name. So I'll leave it at that.
Talking about good and bad things, I wanted to switch the conversation a bit to ESG, like to what you've done in that space and what you plan on doing on that space. And I think it would be convenient to start with you, Alberta.
Happy to.
Yeah.
Yeah, so, on the ESG space, we're not likely to do, a named bond program. We're not going to do a green bond program. We're probably not going to do transition bonds. It doesn't mean that the ESG space isn't alive and well in Alberta. I mean, you cannot talk about greenhouse gas reductions or carbon neutrality without talking to your largest emitters in Canada. And the only progress really that's been made in Canada on emissions reduction is in Alberta and Saskatchewan. Those are important things, and those are provincial responsibilities, and those are funded through our fiscal program. In terms of a use of proceeds bonds program, our view really is that it eats away at the liquidity of our core funding. And we've tried to be responsible in our approach to markets. We've tried to build benchmarks. We've promoted liquidity in our name. And that's actually becoming more challenging for us as we're blessed fiscally this year particularly, and into our forecast. We're in a position where we're actually paying down debt. We're the only province in Canada reducing its debt load right now as part of our fiscal plan. So my focus in the Treasury is to keep the bonds that we have, the stock that we have, liquid and tradable. And I think putting a use of proceeds program in place would eat away at that. But we're not climate change deniers. We believe ESG is not a four-letter word. We believe in the space. I just don't believe in funding it as a program. And it's not to criticize the work of Ontario in that space and Quebec, both is fantastic. But they have a debt stock that allows them to have liquidity in their green bond programs. We don't have that.
Okay. And just a follow-up question to that, how do you think about what happened on Monday with your premier involved?
Did something happen Monday?
I mean, does that change the risk perception of your province and your?
We haven't seen that. We do. I mean, it's important to remember. We talked a lot to foreign investors, but a lot of Canadians don't really realize the rather unique constitutional structure of Canada. And the disproportionate responsibilities of provinces. And, under the Canadian Constitution, provinces have fiscal autonomy across the board in terms of taxation. We're responsible for education. We're responsible for healthcare. We are a socialist nation, and we're proud of it. But coming with that, the whole point of the sovereignty, the Sovereignty Within the United Canada Act, is simply to remind the federal government of their responsibilities under the Constitution. And it provides really just a signal that, Alberta is asserting its rights under the Constitution. And where we see federal creep into our responsibilities, all we've done is call them out on it. I mean, we haven't really done much. Now, that is very complicated when you're talking to international investors. You're describing the Canadian Constitution. It's really not the greatest start to a conversation with somebody who wants to buy your bonds. But it just comes back to pricing, right?
Yeah.
So if we can explain it in a reasonable fashion and simply say, look, whatever you think of the politics of it, the fiscal strength of Alberta is solid. It's far superior to that of the Canadian government. I mean, if I'm worried about credit ratings in Canada, I'm worried about Canada. I'm not worried about Alberta.
And what about you, Jim? What have you done in the ESG space, and what do you plan on doing going forward?
Yeah, our approach is much like Steve's and Alberta's. We have fully embraced ESG and have done for a long while. So ESG values, ESG outcomes are onboarded by the government. And our approach, though, is, and we think it's actually got the biggest impact, is to report as an issuer as exactly what are our ESG credentials. Show us what your track record is and report regularly. And this is will be our approach. We started last year with a government report on ESG. This fall, BC Hydro, it's our hydroelectric utility, you probably know, they just released their own ESG report. So that transparency, we think, is actually really what investors should be, and really, to have that information so that they can do their risk analysis is really what this whole ESG policy change in the capital markets is about. We're less inclined to believe that a bond, a use of proceeds bond in itself, actually moves the needle for the quality of life. It really was what decision did they make in the space, that transit system, that's affordable housing complex, whatever it was. Who is this issuer? And that, I think, is what investors should hold issuers to account, less focused on bonds. I will, though, say, without being, we're in the same boat as Alberta. We have a smaller program. We don't have the luxury of being able to fracture our liquidity into sidebar use of proceeds bonds. So we don't have that luxury that Ontario has. But anyway, this is our approach, and I think that it's that we'd like to be held to account as an issuer, that we're ESG based, and that's. You'll see more reports come from the province along those lines to sort of echo that approach.
That makes sense. You are in a very different boat. Would you like to talk about your province a bit?
I am in a different boat in Ontario, but I think the consensus or converging message here is that we're all on the same page, and we're all focused on ESG, and we're all trying to do what we can in that space. And the method we choose may be quite different, but it doesn't mean we're not all kind of driving down the same road, if you will. For Ontario, I'm sure a lot of you are aware, we have the largest green bond program in Canadian dollars. We've issued the most green bonds in Canadian dollars at 13 for a total of $15 billion, some of which has matured already, so that's not all outstanding at the moment. We've had a green bond framework in place since 2014, so we were quite early into the market. We're going to continue doing that. It is our intention to issue 2 labeled bonds each fiscal year, and this year will be no different. The one thing that is starting to percolate is we are working on a new framework, because our existing framework has been around for a while, and because it was put in place when the market was really in its infancy, a lot of change has occurred. And while we've tried to track and make sure that our framework stays aligned, we feel now we need to just open it up completely and refurbish it, if you will, and then show it back out to you when we're ready. So that's what we're expecting to do in early 2024. But for the time being, we're still operating under our existing framework, which is quite simple, but still seems to address the need. When you think about a provincial issuer of labeled bonds or a provincial issuer in general, I mean, the thing about us, and it's been alluded to here, is that as a group, a lot of the money we're raising is for healthcare, is for education. Like, those are 2 top line items for all of us. It's not anything to do with the geography. It's the downloading of that responsibility to each of us. And so if you are interested in thinking about where your dollars are going, whether it's a labeled bond, which we do, or not a labeled bond, really those are the things you're funding, and if that's what's important to you, then I would suggest buy more provincial bonds.
Sounds good. We don't have much time left, but I'd like to ask the 3 of you quickly if you're doing any changes to your hedging strategy.
We always have an active hedging program. We may have lifted it a little bit since we've gone into this interest rate environment. That's all I'd say about it. It's not dramatic, but there has been a little bit more activity. We think it does probably merit that attention, but it's not a big change.
What about you?
We're just being a little more opportunistic in terms of timing our deals. Hedging's a bit of a curse as a province. If you get it right, no one cares, and if you get it wrong, they hang you. So we really just avoid the space, to be honest.
I don't judge you. What about you?
Our hedging strategy has I think evolved where all of our foreign issuance is essentially now hedged back into Canadian dollars. That has happened over the last sort of 12-month period. And we're using and we do a lot of hedging in and around our domestic issues. We have a whole debt management team that is active in that regard. So our hedging program, I would say, is kind of status quo. We're always monitoring what we can do in markets, what we can overlay, what we can change in terms of our fixed floating mix. That's just part of the business we all do. And so we'll continue to do that and behave according to what it is the objectives we have for our programs going forward.
I should say, Paula, when I mentioned hedging, I was talking about interest rate hedges.
Yeah.
Whenever we go offshore into these other currencies, we're always
Yes.
on cross-currency hedges to bring it back into Canada.
Yes.
That's no different. But.
Yeah. So we're up. And I'd like to thank you so much for your time and thank you for listening to us.
Great. Thank you.